The broadcast is now starting. All attendees are in listen-only mode.
Good morning, everyone, and welcome to Investor Expo Show for June 4th. My name is Anna, and I'll be your host today. We are having a great lineup of 4 speakers for you. Michael Walts, Eric Gebhardt, Wally Olopadia, and Dr. Barry Burns. This session will be recorded and sent to your email. Please take a look at your GoToWebinar control panel. Into the questions box, you will be able to ask any questions you want during the speaker's presentation. Let's begin and bring to the show our first guest, Michael Walts. Good morning, Michael.
Hi, good morning, Anna. It's a great day
How are
today.
you?
I'm doing good. I'm doing good. You know, it's June already. Gosh, the time is going by pretty quick.
Time flies with quarantine and stuff.
Sure does. Sure does. Hopefully, things will get back to a normal soon.
Yeah, what are you planning to share with us
Okay,
today?
so today, I'm going to be talking about how to read, the order flow, use the order flow to get better trading results. A lot of traders nowadays, sort of are moving more towards automation and forgetting the trading part. And I want to show you how you can read what's happening in the market to stay in a trade longer or get out of a trade earlier rather than taking the full loss. Just take a smaller loss. So that's what I'll be talking about today. So let me get my screen set up here. Whoops, wrong screen. There we go. Should be okay now. Should just see the one screen.
Yep, looks good to me. I will get back to you in 45 minutes.
Okay, great. I'll get started now. So, hey everyone, it's Mike Valtos from Orderflows, and welcome to today's presentation. It's I was just talking earlier, and it's kind of a crazy time that we're in. With the coronavirus, with all the protests going on, and a lot of people are always wondering, how is this going to affect the markets? Honestly, I talk to a lot of people. They think, well, the market should be down, right? Shouldn't the markets be trading around 2,000, yet we are, trading above 3,000 again, and it just seems to keep going higher and higher. And if you're using order flow, you would have been on the right side of a lot of the moves. So what we're talking about today is how to get better trading results with order flow. And what I'll be specifically talking about is order flow market internal data. And when we talk about what it is, why it's important, and how to use that internal data to nail trades. So again, for those just really briefly that are new to a presentation by myself, my name is Michael Valtos. For the last 5 years, I've been the owner and trader at Orderflows.com, which is a software and education company to help traders understand what's happening in the market. But prior to that, my professional background is I spent 8 years at JP Morgan as Vice President of Futures Trading. I spent 4 years with Cargill as a trading desk manager, 3 years at Commerzbank, the big German bank, as a licensed Eurex trader, EDF Man, the big English trading company, for 2 years as a global macro trader. I spent 3 years at Dean Witter. I was a Globex trader, trading electronic when electronic markets just started taking off in the mid 90s. And I started my career on the CME trading floor as a runner. Back in those days when there was a trading floor, that's how a lot of people got into trading, is they would come down to the trading floor, either the CME or CBOT or NYMEX, and get a job as basically the lowest level. But now you don't have that, right? Now to get a job with the trading firm, you got to have a math degree, you got to have a programming degree, preferably both, or you got to be literally a rocket scientist. But so a lot of people don't get that entrance into the trading world, and then they start going out there and trying to figuring things out for themselves on their own, and it's tough, right? So that's why I created Orderflows.com, and sort of the flagship product is the Orderflows Trader, which is a software that runs on NinjaTrader. I created it in 2015, and it runs on NinjaTrader 8, and it's a volume footprint chart with 7 pre-programmed order flow indicators. And I just want you to know the charts that are used in this presentation are generated using that Orderflows Trader software. And I wrote a book I started writing it in late 2013, 2014 on trading order flow. right? And it's from this book that the Orderflows.com and the software came about. But if you stick around to the end, I'll show you how you can get it for free, right? It's 150 pages. You can download it. You're not going to get sent the hard copy. Now, just a brief disclaimer before I jump in. Do understand that trading involves risk, right? An investor could potentially lose all or more than the initial investment, and risk capital is money that can be lost without jeopardizing your financial security or lifestyle. Don't think that you've got a couple $1,000s, you're going to put it in a trading account and turn it into $1 million in a month. You're not going to do that. Now, let's jump into it. So markets, specifically futures markets, but Forex and stocks are the same. They trade in a two-way auction. There's a bid and there's an offer, right? And people that are sitting on the bid are what is considered passive buyers. They're letting the market come to them, right? If you're on the offer or above the current offer, you're what's considered a passive seller. Now, for a trade to happen, someone's got to cross the bid offer line. So an aggressive seller has to sell into the bid, sell to the passive buyer, or for the market to start moving higher, aggressive buyers have to start buying the offer. They have to start buying aggressively. They have to lift the offer, lift the next offer, lift the next offer. Aggressive buyers buy from passive sellers. But interpreting what you see on the dome or time and sales is like trying to drink out of a fire hose, right? There's just so much information. An order flow footprint chart takes that information and puts it into an easy to read and apply format. What you see traded on the dome is all here, but more importantly, it puts it in a format that you can make informed trading decisions from, right? So you can see, when aggressive sellers are in control, when aggressive buyers are in control, when in a bar, right, within a time period, when it shifted from all aggressive selling to all aggressive buying, right? That's information that as a trader, you want to use and apply in your trading. So after all, what good is data if you don't know what to do with it, right? So I'm going to talk about sort of the three building blocks of order flow analysis, and their delta, point of control, and imbalances. It allows you to take the raw data, the raw Lego pieces, and build a nice house with. So just really briefly, delta is the difference between aggressive buyers and aggressive sellers in a bar. Now, delta is important is so that you know who is dominating the current market as shown in the bar, right? And again, it's the difference between the volume traded on the bid versus the volume traded on the offer, right? And delta on my software and most order flow software, the volume footprint chart goes along the bottom, right? It runs along the bottom. Some softwares will put it above or below the bar, but in general, you can see it along the bottom. And if your order flow software doesn't have delta, you should ask, why doesn't it have this information? Because you want to know, is there more aggressive buying or more aggressive selling? Now, point of control is the price level in the bar with the most volume. There's no fancy mathematical formula, or calculus or anything like that. It's just simple arithmetic. The price level with the most volume is traded on the bid and traded on the offer. If that price level has the most volume, that's your point of control. Every bar has a point of control. And you can see I highlighted a few of them here, but generally, it will be highlighted with a rectangle around it. Some people like to color it other colors, but generally, when you look at it, it stands out, right? You want to know where in the bar the most volume occurred. And if you're familiar with things like volume profile, market profile, you'll understand the importance of point of control because it can act as value, in that bar, in that microstructure. Now, the third part of order flow is market imbalances, and they occur when there are more aggressive buyers than sellers or vice versa in the two-way auction. So a buying imbalance occurs when there's at least 4 times as many traders buying the offer than traders selling the bid, right? So you got to have 4 to 1. So, if the market is, 30.19 and a quarter bid at 30.19 and a half, and what traded on the bid was only 10 contracts, but 100 contracts traded on the offer, that you'd consider that a buying imbalance because there's more people buying the offer than selling the bid by a certain amount, right? And a selling imbalance is the opposite when there's at least 4 times as many traders selling the bid than traders buying the offer. And when you start seeing these develop, right, what you're looking at initially on a footprint chart is one price level. But then when you start seeing aggressive buying at the next price level, the next price level, the next price level, it's telling you that aggressive buyers are in control. And think of it this way, think of imbalance this way, right? You have a big force against a smaller force. Who do you think is going to win? The big force is going to win pretty much majority of the time. And on a footprint chart, it's going to show, in the volume, in the bar, buying imbalances are going to be blue. You can see I highlighted these with blue arrows. I didn't highlight all of them. And selling imbalances are red numbers inside the bar. I highlighted a few of the selling imbalances. So, generally, as the market rises, you see buying imbalances, right? You see aggressive buyers are lifting the best offer and looking for the next best offer. Demand is present, right? Generally, as the market falls, you see selling imbalances. You see aggressive sellers are selling into the best bid and looking for the next best bid to sell into. Why? Is because there's a lot of supply present, right? If there's a lot of supply in the market, they got to start moving it, right? They got to start lowering their offer. They got to start hitting the bid. When they can find buyers that are willing to pay a certain price, they're going to hit those bids. Then they're going to hit the next bid. They're going to hit the next bid until their supply is gone. Now, the main topic I want to talk about is market internal data. What is order flow market internal data? So earlier I talked about delta, right, which is the difference between aggressive buyers and aggressive sellers in a bar. And most order flow traders use delta in their trading, but there are further distinctions within delta, right? There are max delta, min delta, and cumulative delta, right? So it's not just the headline delta number, which is the difference at one point, but you also have max, min, and cumulative. So max delta, what that is the level at which aggressive buyers were the strongest in the bar. So meaning a max delta number of 719 tells you that at one point in the bar, there were 719 more aggressive buys than aggressive sells. Now, max delta will always be positive, and on some occasions it may be zero, which means at no point in the bar were aggressive buyers in control. Okay, min delta is the opposite of max delta. It's the level at which aggressive sellers were the strongest in the bar. Think of max delta as buying, min delta as selling. Okay, so a min delta number of minus 719 tells you that at one point in the bar, there were 719 more aggressive sellers or sells at, again, one point in the bar. Min delta will always be negative, right? That's one of the distinctions, because when you're calculating just the delta, right, you have your max delta, your min delta. Max delta is positive, min delta is going to be negative, and that's how you sort of keep the score. So min delta is always going to be negative, and on some occasions it may be zero, meaning that at no point in the bar were aggressive sellers in control. So on the volume footprint chart, right, on, like, for example, my order flows trader chart, you could put the max delta and min delta on your chart so you can see, where the strongest buying was, where the weakest or the strongest selling was. And most bars you're going to have, generally most bars you're going to have, sort of a tug of war, right? You're going to have some max delta, you're going to have some min delta. Okay, now there's going to be instances where you have some bars, like you can see right here, right? This was yesterday afternoon. As we made this new high at 29.5, there was no min delta, right? The bar before it, no min delta. It's all max delta, right? And we close somewhere near our max delta numbers. Okay, so I'm going to get into that a little bit later on how to read what's happening in the max and min delta. And the easiest way to remember why max and min delta are, or what they are, is the strongest level aggressive buyers and aggressive sellers were in a bar. Most bars will generally show both aggressive buying and aggressive selling, but there are bars where one side stands out, right? All aggressive buying or all aggressive selling. Those are the bars to pay close attention to in context of the market. Like I said, most bars are going to have some positive delta, max delta, some min delta. But there's going to be bars that have either very little min delta or zero min delta, or very little max delta or zero max delta. And when you read what's happening in the market, put it in context of where the market is trading, it can give you some nice trading. So, just quickly, for example, okay, this is, the 2nd of June, which is Tuesday, and you can see how the market popped up right here, right? It just popped up from basically 62 and a half, all the way up to 65 and a half. But what preceded it, right? You had a couple of bars. You had one bar, 2 bars before that had 0 min delta. The bar immediately before had 0 min delta. But look at the max delta, 642, right? And where did the final delta close, right? It closed at 642. So it closed on its extreme buying. So I know that what was happening is, in these 2 bars, right, there's very little selling, even though, people are trading the bid, but aggressive sellers aren't in control at any point in this bar. And then when I see this bar just dominated by aggressive buying, 0 min delta, max delta 642, final delta closing on the max number, I'm looking for the market to continue in that direction because I know I got aggressive buyers. And the beauty is this market really hasn't started moving yet. It's not till the next bar where it opens up at 2.25, trading 2.25, 2.5, and then boom, over the next 5 minutes basically pops up a quick 3 points. Now this is yesterday in the 10-year note futures. 10-year notes are a contract that are extremely thick in the sense that a lot of volume trades on the bid, a lot of volume trades on the offer. It's not uncommon, as you can see here, to trade, several thousand contracts on the bid and several thousand on the offer. But look what's happening, right? This market is just going sort of sideways here in this box, okay? Then you're thinking, well, yeah, it looks like it's kind of coming down. But then when you look at the internals, you look at the max delta 1, 1, 0. Right here, you got back and forth, right? This is just your average bar, right? You got 303 max delta, 407 min delta. But here, you got 1, 1, 0. And look where the min delta is, 1451. Final delta closed at 1450. Here you've got min delta of minus 3,361, final delta minus 2953. This is that mixed bar, still negative, minus 407 min delta. We close at minus 205. And then here, minus 1039, 0 max delta, final delta minus 1039. So you're closing on your extreme here. You're closing within one contract of your extreme here at 7 o'clock. Here you're closing, about 300, 400 contracts away. But what do you see? It's mostly aggressive selling. I'll say mostly because you have this bar with a little bit of aggressive buying, but all aggressive selling, all aggressive selling, all aggressive selling. What do you think the market's going to do, right? If it can just break through this little double bottom here, we're going to drop, right? And then what happens in this next bar here, right? We trade from, the 138.22.5 area, boom, over the next 30 minutes, all the way down to new lows. Now people say, well, yeah, that's only, what is that, 5 points. They trade in half ticks in the 5 years. 5 years is a contract that people push through huge size. So if you're just making 4 or 5 ticks in the 5 years, you're probably trading 10, 20, 30 contracts that you only need to make 3 or 4 ticks, on the 5s. Now, cumulative delta is the running total of delta on the day. And cumulative delta can be positive, which means there's been more aggressive buying than selling, and generally the market will be higher on the day. Cumulative delta is negative. When cumulative delta is negative, it means there's been more aggressive selling up to that point, and generally the market will be lower on the day. But that's not always true. I say generally because there's times where the market has been selling off all day, and we're down negative on the day. Then the market's going to start moving up. For the market to start moving up, you're going to start seeing cumulative delta getting lesser and lesser, and it could still be down on the day, but cumulative delta is turning positive. So there's I don't want to give you a statement saying that cumulative delta is negative means there's the market is lower on the day, because it's not true. Cumulative delta is dynamic. So this is The footprint chart, cumulative delta, you should have on your chart. It'll appear, on the bottom with your other delta numbers, and it's going to tell you. You can see here, right, as we hit the high of the day, right, cumulative delta is its strongest, right, which is, generally how it should be. But I'm going to show you some examples where you have this divergence when the market is making new highs, but cumulative delta is getting weaker, and what that means. So every bar has a max delta, min delta, and cumulative delta is cumulative up to that point in the bar. And remember, max delta can be positive or it can be zero. Min delta is negative or it can be zero. Cumulative delta can either be positive or negative, and on rare occasions, it can be zero. Okay. So why is this data important? Is because how many times have you taken a trade and immediately it went against you, right? It happens to all of us. It happens to me sometimes. I think I got the world's greatest trade set up. I get long, market goes up one or two ticks, and then immediately sells off. Well, it's what you do next, what you read next in the order flow that's going to determine whether you're going to be successful or not on the trade. So let me ask you, do you let a trade stop you out, or are you willing to get out of a bad trade early? Getting out of a bad trade earlier is going to give you a smaller loss. Market internals can tell you when market conditions change. Now, I'm not saying that as soon as, the first sign of a trade not working out, you get out, because, eventually, there's going to be trades where, you find yourself getting out early, and then the trade goes to a winner. But what I'm saying is, when you have a reason for a trade, right? You say, I'm getting short because of this reason. But then things in the order flow change, as you start moving away from your entry, all right? Then the market is telling you, you know what? It's discounted already, your trade idea. And, chances are it's not going to work out unless you still see follow through order flow. So this is an example from Tuesday, right? Market was selling off. This is S&Ps selling off, and it looks negative, right? You see it coming down here, 30, 65, 64, 63, 62, 61. Then you get in here, you start forming this base. And if you're watching what's happening in these deltas, you can see that, you know what? This market is starting to turn. So if I'm short, okay, if I'm short, then I see something happening here in the deltas, max, min, delta, and to a certain extent, cumulative delta. That's my reason to cut this trade either at a small profit, a small loss, at a break even, rather than let it come all the way back up to my entry and, or my stop rather, and take a full loss on it. That's sort of one of the drawbacks of, a lot of these automated trade entry systems, all right? I don't want to get into their names, but where it just, you're going to run it on autopilot. I've got my take profit here, I've got my stop here, and it's either going to go to my take profit or it's going to stop me out. Well, at some point, right, you want to be a trader, you got to trade, you got to read what's happening in the market. So for example, right, this market's coming down, but if I'm watching the delta, I see, okay, yeah, we're here at the low, strong negative delta, minus 459, minus 199, minus 13. Okay, so I know that the aggressive selling is getting weaker. If I start looking at the internals, max delta is still zero. Okay, that's what you like to see on a market going down. Here, you start to see some buying creep in, positive 53, positive 43. More importantly, the min delta, minus 774, minus 213, minus 179. So the min delta is actually getting weaker as well. So it corresponds to what you're seeing in the final delta. But then in this nice green bar, what do you see? Min delta is -1. So it's only one contract, one, of aggressive selling in control of that bar. Max delta is 500. Right? You don't see a 500 in any of these previous bars. And we close right near our final delta number of 439. Okay, then yeah, maybe you're not convinced. You do have a bunch of buying imbalances as well going on in there, which is also bullish. And then in this next bar, what do you got? Right? Min delta 0. Max delta 443, final delta 313. So, think about it. What's going on? You got aggressive selling all the way down here. Strong aggressive selling is showing up in the the min delta with small max delta numbers. But then you get here And you could just see the aggressive selling petering out. Minus 774, which is strong within, minus 213, minus 179, minus 1, 0. All right. Then you start seeing the max delta growing, 515, 443. Right. That's your sign that, you know what, I'm short from up here. You know, maybe this is time to, you know, lighten up on my position, get out of it, or, you know, take some profits rather than let the market just slowly grind you. Because a lot of times, you know, people will sit here and, oh, I'll let the market, yeah, this is just a bounce and then we'll continue down. No, if you're seeing what's happening in the internals, you know that it's strong off this low. Okay, so this is yesterday. Max and min delta is going to help you see what direction we're going in the market. So, you know, we're just sort of going sideways here. Okay. Max and min delta is just kind of going back and forth, but you see it's starting to build up here, right? You see, you know, it's you know, 32, 85, 142. That's the max delta. 85, 11, 106, 86, 85, 70, 182. Min delta is kind of strong, minus 900, minus 400, minus 300, minus, then it gets in here, which is kind of back and forth, minus 100, 129, 166, 54, 128, 126, 152. Right? You're still putting up kind of decent min deltas, but at the same time, buying comes in, right? What's happening? You know, buyers are absorbing that selling that's going on until finally the selling isn't as strong as anymore, right? Earlier, it was quite strong here, right? Minus 900, minus 400, minus 300. Then you're just back here, you know, right around your swing low again. But yeah, you only got 128, 126, 152, right? The volume, you know, isn't that much different, you know, 1400, 900, 800. Yeah, here you had, you know, 2000, but here's 1500, 800, 1100, 900, 900. And then boom, strong aggressive buying, 1689, max delta 1748. Next bar, 836. We close the final delta also at 836. Min delta minus 19. It's nothing, right? As the market is moving higher. Now, this was yesterday, you know, just before the cash close, and you know, this was very interesting. What was happening in the market, right? You got these new highs, right? This is what you like to see at new highs, right? Big, strong, positive delta, max delta, very, you know, closing near your the final delta closing near your max delta. Very small min deltas. In these cases, they're 0. But for this market to keep going higher, you want to see the follow through. And then in the next bar, it starts out max delta 180, min delta closes at 31, or min delta is at 316, minus 316. Final delta closes at 177. Do you think this market is going higher or not? You know, you had the aggressive buying earlier, you had the nice positive delta earlier, but aggressive sellers took control of this bar. Strong min delta, final delta closed negative, decent negative, minus 177. Say you're still not convinced. You wait for the next bar. Okay, this next bar right here. Max delta of 1. It's nothing. There's no aggressive buyers. Min delta minus 822. Final delta minus 445. Okay, so you know now, yeah, that aggressive selling. You know, this honestly in the S&Ps you get a lot. You know, this algo pop around 250. You know, 10 minutes before the cash close, but then it dries up. You don't have that aggressive buying anymore, and instead you're seeing the aggressive selling. And you know, you take this, you know, quick move from, you know, 24, 25 all the way down into the teens. Now this is gold, right? You know, because a lot of people look at other markets besides E-minis, but take a look at this bar, right? You see the market going down, down, down. You see this big red bar. Oh my gosh, we're going lower. You know, we're going to trade below 1690. But what happens, right? If you see this bar, it's got a delta of just minus 13, right? You're expecting a big down red candle to have a, you know, a big strong negative delta. And at one point, it had a strong min delta, minus 203. So at one point in this bar, the delta number was showing up as minus 203, but buying came back in. It only closed at minus 13. So very early in that bar, min delta minus 203, looking very bearish, but it ate all it back. All the aggressive buying came in, turned it from minus 203 to just minus 13. That's bullish, right? Because halfway through this bar, when it was very bearish, aggressive buyers came in and bought the market, moved it back higher. Then the next bar, mostly max delta, min delta minus 2, max delta 94, final delta closed at 91. In the next bar, to a certain extent, min delta minus 5, you can see 37 max delta, final delta 32. And then obviously in the next bar, but by this point, you should have already been along off of, somewhere in this bar or early in this bar. This one's just all buying. Right? You see 0 min delta, max delta 136, final delta 133. So remember, for a market to move in the direction you expect it to, there needs to be follow through order flow in the direction you expect the market to move, right? Because without that follow through order flow, what reason is there for the market to move, right? Your super duper indicator? No, markets move on the actual buying and selling taking place in the market, right? That's why it's important to understand how to read the market internals, what's happening in the market. So, I'm going to take you through a few examples here on how to use these market internals to nail trades, and if you're, I love that darts, the Dart World Championship. I never really understood it. When I first saw it on TV years ago, I thought, oh gosh, this is kind of lame. But it's actually kind of exciting. And trading should be exciting for you, right? And being able to use your skill as a trader is the same as being a professional athlete and being able to score or throw the darts and get 180 and or put the ball in the back of the net. And that's what trading is all about, putting the ball in the back of the net. So this was Monday on the S&Ps, the E-minis, and we were making these new highs, from 55 all the way up to 59. And so there were some shorting opportunities. I labeled them here A, B, C, D, and potentially E. So in this case, you want to be watching what's happening in the deltas, right? The max delta, the min delta, the cumulative delta. So I'm going to go through easy here. So I'm going to talk about the cumulative delta. So yeah, point A, cumulative delta was 10,636. Point B is 9,875. Point C, 10,536. Okay, at point A, you got a nice strong positive cumulative delta. Point B, delta's a little bit weaker. Okay, it's only 900. Okay, point C, it's back up to 10,500. Okay, this point C. Point D, it's 10,480. And by point E, I didn't label it there. That's the red arrow. It's back below 10,000. So think about it. What's going on, right? This market is going higher. Okay, 10 point A, 10,636 cumulative delta. Point B, a new higher high, but less delta. Okay, it's a sign the market is getting weaker. But again, if you shorted that, right, you got to be watching what's happening in the order flow, right? Go back here. So 9875. Okay, say you get short here. Okay, you get short. Does the market sell off? No, it just goes sideways. Okay, when a market's going sideways, that's not a good sign when you're in a trade. For me, I like to expect the market to move within within 2 bars after getting taking a trade, and as many as 5 bars. So between 2 to 5 is my target, right? If the market is not moving down, if I'm short and the market's not moving down here, so say I'm short immediately here, right at the low of this bar here, right after this bar closes at 54 and a quarter, 1, 2, it's back up to 55 and a half, 3, 4, 5, this is my sign to get out. But more importantly, I got to be watching what's happening, in the delta. By the time I get back here, delta's grown back up to 10,000. Okay, yeah, I'm fine. Take my loss. Okay, I'm going to wait for the next trade. So market goes back up, a new high, a nice positive delta again. It's not high, it's 10,536 at point C. It's higher than B, but it's 100 contracts less than point A, but I'm not going to split hairs. It's relatively the same. D, again, still about the same, but again, I just rallied 4 points from 55 up to 59. Delta is still about the same. So what's that telling you, right? It's telling you that, there's, even though there's aggressive buying, there's also aggressive selling, right? You should have a big positive jump in the cumulative delta, by between point A to point D, A should 10,636, point D, yeah, you want it to be at least, 11,000. I'm not going to say hard and fast, it should be, 500 contracts more, but it should be more, not about the same. Then as you start going sideways in here, it loses that delta. Cumulative delta, 10,480. You get into point E in here, it's only 9,900. So where's the strength in the market, right? It's not there. So if you're looking for this market to break out, it's probably not going to happen. And instead, the trade is probably going to be to the short side rather than to the long side. And what happens? The market sold off. So anytime you're up at new highs, right, you got to watch the cumulative delta. Is there strength or weakness showing? Right, so you can see here, right, 19,000, the first arrow, cumulative delta 19,400, second arrow 19,500, third arrow 20,400. So yeah, cumulative delta is expanding more positive. That's what you want to see on a market that's going to be trending higher, right? Not cumulative delta just sort of hanging around the same level and then losing, some of that delta as you're at the high of the day, right? You want to be seeing, for a market to keep going up, you're going to be expecting cumulative delta to keep rising, right? Now, this is on Tuesday in the S&Ps. This was right after the cash open, and this was very interesting. Cash opened on Tuesday, sold off down to this, 51 and 3/4 area, bounced back up, and it looked like it was starting to sell off, right? You see the negative delta here in this red bar, minus 861, minus 1300, minus 982, three big strong red bars down. Max delta 28, only 0.28. Min delta minus 966, minus 1500, minus 1000, and we're closing our final deltas right around those numbers. And then this green bar opens up, minus 840 on the min delta. So this delta number is showing minus 840, okay, right here. But then what happens in this bar? It reversed. It went from minus 840 to positive 412 max delta. Min delta minus 840, max delta 412. We closed at 355. So it is actually a swing of minus 840 to positive 400. So that's, a swing of 1,200 contracts from very strong min delta to strong max delta. So that's telling me this market's not going lower, even though these three bars very bearish, right? That's your sign to get long. And then the market, boom, immediately moved up from 55 above 60. This is a bonds. This is a 5-minute chart. This is yesterday. Excuse me. So what do you see? Again, sometimes, trading the market's going to be a little bit detective, right? Okay, the market's popping up, going a little bit higher here. You can see mostly max delta in these three bars here, 42, 30, 556. So final delta is positives. You can see max delta 117 versus 0, 71 versus minus 5, 586 versus 0. Okay, yeah, maybe this market go higher, but then it sort of drops off a little bit and goes sideways, okay? But when we're going sideways, what are you seeing? Yeah, you see negative deltas, minus 221, minus 29, minus 175, minus 17, minus 316. But look at the max delta. Very little aggressive buying. 0, 16, 0, 0, 0. So when I say very little aggressive buying in the max delta, what I mean is aggressive buyers weren't in control in 4 out of 5 of these bars. Even though there's some volume traded on the offer, it's not enough to turn the delta positive, except this one case that's got small delta of minus 29. There was 16, but everything else 0, 0, 0. Min delta minus 280, minus 62, minus 238, minus 62, minus 335. Right? And then the next two bars, this next bar, 0 min delta, all max delta, and then min delta, max delta, positive delta. But looking at these bars in here, which direction do you think the market's going to go? Going to go up or going to go down? Right? It's more inclined. It's telling me it went sideways in here, and there was supply coming into the market. Okay, if you're ever traded institutionally and you got a lot of supply, you're going to know that you don't want to put your foot on the gas pedal, right? You sell some, you let the market pause. This is that pause, then you sell some more, right? So you can see how the market dropped from, the 26 area down into new lows at 06, at 05. So order flow analysis provides the trader advanced information that they need to gain an edge over other traders, right? Order flow allows you to see and understand what is happening in the markets that other traders just don't see, right? So hopefully you can see how powerful order flow trading is, right? Don't overcomplicate trading. Trade what's happening right in front of you. So if you found this helpful, I hope you did, you will really like my Orderflows Trader 2.0 software package, which makes order flow analysis very easy. So, who wants to learn order flow analysis and add it to their trading? So there's two ways. One, you could do it on your own. You could spend a year looking at a chart, trying to figure out order flow. You waste a year losing more money trading, basically. And when I ask you a year later from now, when you attend one of my presentations or watch a video, I'm going to ask you how your trading is going. You're going to look like Rambo. Or number two, get the education and software from a trader who has successfully traded order flow at the highest level for literally decades. Skip the massive trading losses, skip the wasted time. And the way I like to describe it is, imagine you're at Disneyland with your family and Mickey Mouse comes up to you and says, "Hey, come with me, go to the front of the line." That's what I'm offering you today. The Order Flows Trader 2.0 for Ninja Trader 8. We're probably going to have an Order Flows 3.0 later this summer. It's several months away, so don't email me asking for the upgrade now, because it's probably not till August or September, and it's going to be a free upgrade. And it works on Ninja Trader 8. It doesn't work on Thinkorswim, doesn't work on TradeStation. It's on the Ninja Trader 8, and it'll work on the free version. Is the volume footprint chart that you saw generated with these charts in here in this presentation. There's 7 pre-programmed order flow indicators. I didn't even talk about those today. I just talked about the simple deltas. You're going to get my chart template, and normally this is $899. But having order flow software is one thing. The next thing is knowing how to use it. I just don't give you the software, send you on your way. I provide you a lot of education on how to trade order flow. And for example, one of the things that I offer when you get my software is I do a weekly live group training session for users. It's on Tuesday nights now. It used to be Monday, but it's Tuesday now. And if you can't attend, you can watch the recordings. And again, there's some people out there that, you spend $2,000 on your software, then you want to join their group, you got to pay another $200 a month. What for? First of all, I don't charge that amount. And, for the weekly group training, where you could ask questions, that's free. It should be free. But I'm also going to give you the Order Flows trading course, which I normally sell for $297 on my website. I'm going to give you access to my Order Flows Inner Circle video series, which, there's 56 videos on advanced order flow training, tips, tricks, and analysis. So if you put all that together, it's close to $1,700. The software, the training, the live training, the Inner Circle. And as a special bonus, because of Investors Expo, I'll give you access to my favorite course that I created, the Order Flows Playbook. So you add that up, it's close to $2,000. And other traders have got my software, and they see that how helpful it is, and they posted, Mike, this software is remarkably helpful. I can clearly see now what's happening in the market on a very specific time and who's getting weaker as well. Other people say, posting comments on my videos, you give really fresh, insane air in the field, very impressive, very rare. So time to think about success, right? Is the plan, then you're going to reach success. Being a successful trader is just not going to fall in your lap. So you can get all of this stuff for just a one-time payment of $675. So go to orderflows.com. The link is in the chat there. There's no monthly payments, no other payments in the future. So, you're good to go, right? And that's how it should be in trading, right? You want to get started as fast as you can. So go to orderflows.com/off2. It's going to take you to this page. Just scroll down. Takes you to this button, buy now. I want this, right? It's processed by PayPal. I don't deal with your credit card. I don't want it. So just go through that. then within an hour or two, or depending on how long it takes to process your payment to get processed, you're done. I'll send you all the information. Now, if you want my book, go to orderflows.com/book.html. You got to enter your name and email address, and it'll take you to the download page after. So, if act now. I say, it's a cliche, act now, but really, if you want to become a successful trader, you got to take action. All right, you got to take that step forward and get from point A to point B as quickly as possible. So, that's all I've got for you today. So Anna, I'm going to throw it back to you. I don't have time for questions, but anybody's got any questions, just shoot me an email, mike@orderflows.com. But Anna, I'll throw it back to you right now.
Thank you so much, Michael.
Okay. You're welcome.
Let's move on and bring to the show our next presenter, Eric Gebhardt. Hi.